Hi, this is Doug Goldstein from Profile Investment Services here in Jerusalem. Although I mostly spend my time helping people who live in Israel handle their U.S. investment accounts, I like to put together these 4-minute money episodes to teach one financial planning idea. I hope you get a great takeaway. If you have any specific questions about the takeaway or what I'm teaching, or really anything to do with your U.S. investment accounts, feel free to get in touch with me. You can check out my website at profile-financial.com. Hope you find this 4-minute money episode valuable. The question for today is, will dividends or interest boost my retirement savings more? Hi, I'm Doug Goldstein. I'm the director of Profile Investment Services based in Jerusalem. I work with people who live outside the United States who have U.S. IRA accounts or brokerage accounts. We talk about dividends all the time. You know, in a well-diversified portfolio, you'll normally have 3 different types of earnings: appreciation, dividends, or interest. Appreciation is the growth in the value of your investment based on the market going up. Income investors receive dividends or interest on their investments. So let's look at each of these. Interest is what you earn on money that you lend out. For example, when you buy a corporate bond, you lend money to a company. When you buy a treasury bond, you lend money to the U.S. government. These issuers then pay you interest, normally once every 6 months. When the bond matures, they pay you back the original value of the loan. That's interest. Now, dividends. Dividends allow you to share in the profits of a company. As companies have more predictable income streams, they may choose to share a portion of their revenues with the owners of the company, the stockholders. Dividend payouts normally get distributed quarterly. What's the difference between interest and dividends? Interest payments are contractual obligations of the issuers, and bondholders can feel confident that as long as the company or government that issued the bond doesn't default, they will get their interest payments on time. Dividends, on the other hand, can change and are not guaranteed. It is possible for a company facing a decline in profits to slash, suspend, or delay a dividend. Interest and dividends, and capital gains for that matter, are each taxed differently in the United States. And if you live in Israel, you'll have other taxes to consider. Speak with an accountant to understand your specific situation. As current interest rates are near historic lows, some people are hoping the U.S. Federal Reserve will raise interest rates. Interest-paying bonds will be hurt as investors are locked into lower rates of return. Dividend-paying stocks can also be affected. An interest rate hike could change the risk-return profile of your investment portfolio. If bond prices fall, for example, and your bond allocation decreases, you might need to rebalance. To learn more about how to choose an appropriate investment, read my blog at www.profileperspectives.com/choose. Again, that's profileperspectives.com/choose. If you have any questions or comments, please feel free to be in touch with me. My email address is doug@profile-financial.com. And don't forget, before you do any investing, make sure to read our complete disclaimer at www.profile-financial.com/disclaimer.